watching News 9 Live. We are bringing to you day-long non-stop live coverage of Budget 2024, and we have an array of top voices joining us to help us decode the budget for you, all those of you who are watching. To start with, this morning we have Gauri Chadda, tax and investment advisor, wealth management advisor, joining us in our studios here at News 9. We also have Finance Minister Nirmala Sitharaman as well joining us via online call. But Gauri, thank you so much for taking time out to be with us. I'm going to ask a very simple question. Every time a budget rolls around, the topmost question on everybody's mind is, will there be any income tax cut / rebate / down? That's the first question that anybody has on their mind. To soothe some frayed nerves over here, tell us, are you expecting an income tax rate cut this time around?
See, definitely. I have big expectations from this budget, final budget, because the government has a lot of scope, because the direct tax collections have increased by more than 17.7%. I believe that maybe this is because of the introduction of EIS, because now people cannot afford to not declare that income which they were not declaring earlier. So I think this is one of the major reasons, and apart from that, of course, there are other reasons as well because of which the direct tax collection has increased. Apart from that, the RBI has declared a dividend of 11.1, I think, trillion, 2.1 lakh crore rupees. So that's a very big amount. Now, apart from that, the finance minister definitely said in the interim budget that this time she is not making any changes in the interim budget. So this automatically implies that the final budget will see major change. Although I believe that, of course, the tax regime was introduced, new tax regime was introduced, and it was even made better in the last normal full budget. But still, I believe that people are opting for old regime, and if the government is planning to get away with the old regime, then they have to make the new regime so much better that the people themselves drop the old regime. Only then they can eliminate the old regime.
Gauri, so how does one make the new regime sweeter? There is a standard deduction, of course, of 50,000 rupees. There's an expectation that that 50,000 will be made 1 lakh. What more?
See, the standard deduction is 50,000 rupees, but if you see, the standard deduction was introduced after bringing in the 40,000 deduction was introduced after taking away the transport and medical allowance. So this means that in reality, the taxpayers got nothing. After that, that deduction was increased from 40 to 50,000. Again, I don't think that it's a very big amount. So this amount, because you are not giving any deduction in the new regime, and people have this mindset of claiming deductions since very long. So I think this deduction should be increased, and I think it will be increased in this budget at least to 1 or 1.5. If 1.5 is a very huge figure, then probably 1, but this should be increased. Apart from that, I think the slab rates should be rationalized more. Although people are expecting some introduction of deductions in new regime as well, but I believe that that should not be done, because it will make the new regime also complicated, and then there will be no difference left in old and new. And I think then already taxpayers are quite confused till last minute that if they want to opt for old or new regime. So the new regime,
inkling of perhaps the tax exemption lower limit will also be increased from 3 to 5 lakh rupees?
See, that definitely should be touched, because if you see, the basic exemption limit was increased in 2014 when this government came in power, from 2 to 2.5 lakhs. Now this 2.5 lakhs is going on since very long time. In new regime, of course, they increased it to 3 lakhs, but see, 3 lakhs is nothing, because if you consider the inflation rate, average inflation rate also since 2014 till 2024, we can't say that the basic exemption limit should not be increased because there is no inflation, there is inflation. So the way you give indexation benefit in capital gains in case of property or gold or anything, the same concept should be applied by the government themselves to increase the basic exemption limit to at least that level where the inflation meets it. So of course 5-6 lakhs, but now the confusion is that people still believe that the basic exemption limit in the new regime is 7 lakhs, which is not true. So that is the rebate which you are getting till 7 lakhs. So increasing the basic exemption limit is a great thing because not everybody is claiming that rebate of up to 7 lakhs. And if you see that taxpayers in the country are very less, I think around only 2 CR is the base of taxpayers who are actually paying taxes. Of course, tax filers are increasing and they are more than that. But the people who are actually paying tax, they are just 2 crore. So it's a very low figure. So the concept is that when you decrease taxes, people tend to pay more taxes. So that basic exemption limit should be definitely reduced.
Okay.
Standard deduction should be increased and rates should be rationalized further.
All right. And how about, sorry, just one quick question. How about people who are taxed at 30%? Now, there is a difference of 5 lakh rupees between old tax regime and new tax regime. About time we make it 20 lakhs if you want people to really opt for the new tax regime?
See,
I see, I see, Srinath smiling there, perhaps a bit too much of an ask, but Gauri, first to you.
See, I think rather than increasing that slab to 20, I would prefer decreasing the highest slab rate to 25 or even lower if that's possible. Because if I compare the highest slab rate in individual cases, so and the corporates, so the corporates are paying lesser tax. They are paying at 25
That's a
or
perennial
even
debate
lower.
that I think we can never see the end
Absolutely.
of.
And I'm quite miffed with it, but I see there's a point that Karthik often makes when it comes to difference between individual tax and corporate tax.
I mean, see, I like to believe at least, and I think I am as well, I'm a capitalist in mind and at heart. I believe that,
admission.
yeah, I mean, you've got to, at one level, if you're talking about, private sector unleashing animal spirits, investing in capital infrastructure, setting up new factories, getting new investments in, etc., you have to incentivize them to stay in the country. If you, and these are the folks who are actually creating jobs. So the point is, for getting more and more people to pay that 30% tax slab, you've got to incentivize corporate India to be able to create those jobs. That job creation
it's the job
will happen if
creation
you're
discount of 5%.
Absolutely. Job creation discount number 1, and second, preventing the flight of capital. You don't want them to move out of the country and avail of a 15% tax elsewhere and save this, this 10% extra tax that they're paying in the country. So I think you've got to protect capital residing in the country and enable corporate India to create jobs. But on the direct tax front, I believe the government needs to gradually nudge people towards the new tax regime. I mean, what is the point of introducing another tax regime if you want to keep both the tax regimes in service?
add more to
You've got
confusion.
to retire one tax regime, nudge people to move to the other, which means perhaps make the slabs as well as the rates in the new tax regime a little more friendly for people to migrate from the old to the new tax regime. At the same time, there are forced investments that many investors or many tax-paying citizens tend to make without understanding the real benefits of those schemes. And you just make those investments to avail of some tax discount. And I believe the government needs to channel that money which is going into forced tax saving schemes into something which is more productive as returns for these tax-paying citizens as investments, as well as for the country as a whole.
All right, those of course are suggestions. Srinath, your quick take on what is to expect as far as direct taxes is concerned. More money in hands of people. That's obviously the expectation every time around. Are you hopeful that this budget will finally do it?
I'm hopeful because this is a coalition government. So to that extent, there is a political pressure to show optically some difference to the middle class. But I don't see a large drastic tax reforms happening. Too short a time for them to unveil that. And probably we should expect it later this fiscal.
Okay. Srinath, stay with us, and Gauri as well. Let's now dive into this thing that we're discussing right now called direct taxes. What exactly is an indirect tax? What are indirect taxes? We put together a nice, crisp, short explainer for you. Take a look at this.
Last 10 years, the direct tax collections have more than trebled and the return filers swelled 2.4 times. I would like to assure the taxpayers that their contributions have been used wisely for the development of the country and welfare of its people.
The Union Budget is the most awaited Parliament speech every year. Certainly, Part B of the budget speech is the most significant. Definitely, direct taxes is the most talked about. There are three main types of direct taxes in India. Number one, income tax. It applies to all your earnings. The more you earn, the higher the tax rate. Then there is the corporate tax, which is number two. Companies pay this tax on their profits. And finally, there is the capital gains tax. When you sell assets like real estate or stocks, any profit you make is subject to this tax. So why do direct taxes matter? Well, they fund essential services like education, healthcare and infrastructure. In fact, they contribute around 54% of the central government's tax revenue.
All right, so that's what direct taxes are. Shweta
Absolutely.
there helping us understand what direct taxes are all about.
And, let's also quickly take a look while we are on taxation. What are indirect taxes? How do we pay them? And how much, to what extent do they really contribute to government coffers?
Indirect taxation. By unifying the highly fragmented indirect tax regime in India, the GST has reduced the compliance burden on trade and industry. The industry has acknowledged the benefits of GST. According to a recent survey conducted by a leading consulting firm, 94% of industry leaders view the transition to GST as largely positive.
What is indirect tax? Indirect tax is the tax levied on the consumption of goods and services. It's called indirect tax because it doesn't directly tax the income or profit of an individual. Barring fuel, power and alcohol, the GST applies as indirect tax on the supply of all other goods and services. Apart from the GST, there is customs duty, stamp duty, excise duty, entertainment tax and securities transaction tax. High indirect taxes increase the cost of production and hurt India's ability to join key global supply chains, like the one for smartphones. It also keeps prices of everything from cars to homes too high for the Indian consumer. Will Budget 2024 chart a course to reduce the indirect tax burden?
And those, of course, are indirect taxes that you and I pay on consumption of goods and services, not coming out of our pockets directly, but coming out, of course, indirectly. But, talking about indirect taxes as a percentage of total revenue for the government has been reducing consistently, Karthik. You know what? Obviously, this is the GST that we pay. This is the customs duty that we pay, entertainment tax, excise duty, all of which constitutes indirect taxes. It's not swelling a lot, but it's still consistent. Given that GST over the year has been consistent, over about 1.4 lakh crore rupees. I believe that's the average month on month.
I think last 1 year it's been much higher than that. So I think about 1.65 to 1.73 has been the range, during the course of the last year, except for the month of March when it swelled to over 2 lakh crore rupees that it collected, in just 1 month. But then obviously March is always an aberration and you tend to collect higher taxes in the month of March. But my biggest grouse with this whole indirect tax, and ever since, while I'm an ardent believer of the intentions of GST and the kind of rationalization and simplification that GST was meant to do, my biggest grouse is why do we keep GST outside of the budget? I think budget is all about taxes, all about how much you're spending, how much you're receiving.
States are not going to like it very much if
exactly.
you were to have budget.
So you have the GST Council which decides on GST rates,
Right.
but GST is not the only indirect tax, and honestly, as consumers, we tend to sometimes get very excited with GST rate changes because those directly impact us. But indirect taxes like customs and excise and tariffs make or mar the future of competitiveness in the country.